Bitcoin. It's the fad which keeps on going. The broader market is starting to struggle to ignore this beast as it surpassed 1 trillion in market cap. But in this video, I'm going to explore realistically what is Bitcoin's trajectory and ultimately where is the price going to cap out at. I'm going to conclude this video with my thoughts on where Bitcoin will price in 2025 and 2030, so just 4 to 9 years from now. The answer might make you question why you haven't already got involved in Bitcoin, or it might change your price expectations. Maybe this video will help you come to a decision. But let me start by giving a quick overview of Bitcoin. Its origins still remain a bit of a mystery, as its creator and founder, who went by the name Satoshi Nakamoto, has never been found. Anyone claiming to be him has never been able to show credible proof. Bitcoin's original value per coin was extremely small over 10 years ago. To demonstrate a rapid rise in its value, a man bought 2 pizzas in exchange for 10,000 Bitcoin. Today, that 10,000 Bitcoin will be worth over 400 million. I hope those pizzas tasted nice. This rapid increase in value has caught the wider public's attention, both in 2018 and as recently as this year, when its value 5x'd in a really short amount of time. But the question everyone has is, when is Bitcoin's price going to stabilise? Well, a common benchmark and guide for Bitcoin's price is gold. But why gold? It's a bit of an odd choice, as Bitcoin started with the intention of being a virtual payment method, so in reality its value was extremely loose as it literally wasn't backed by anything. But as time has gone on and blockchain technology has advanced, it's become apparent that the way Bitcoin was designed wasn't suitable for payment methods due to its block size. This barrier actually caused a hard fork within Bitcoin to produce Bitcoin Cash, but in this video we're just going to be looking at Bitcoin. Due to Bitcoin's limitations, its proposition started to change. Limited scalability in transactions was a massive negative, but the one thing Bitcoin did have was a name, and to some extent a brand that everyone knew. This is when Bitcoin moved from a method of payment to a store of value. This is how Bitcoin has started to become benchmark versus gold, as they both provide a very similar proposition. They are simply there as a safe storage of value. Both gold and Bitcoin have different sets of pros and cons, which I'll cover shortly in this video. So if Bitcoin is benchmark versus gold, then how do they stack up against each other? Well, to type in this script in April 2021, Bitcoin has a market cap of 1.117 trillion against gold's 10.979 trillion. This means Bitcoin is only 1/10 the value of gold, but it hasn't always been this way though. A little over a year ago, it was just 1% of the value of gold, so the gap has closed a hell of a lot, but there's still a long way to go. One common pricing model, which is referenced to when looking at the price of Bitcoin, is what is known as a stock-to-flow ratio. The reason why this ratio is used is that the model is relevant to scarce items, so items which aren't easily created or discovered. So for gold, there isn't a lot of gold discovered or produced each year versus how much that is already out there. Stock refers to the amount which is already readily available, and the flow is how much is added to the stock over a given time period, normally a year. So for example, there is around 244,000 metric tons of gold in stock, with around 3,300 tons being added each year in terms of flow. So what does stock to flow ratio show for Bitcoin? Well, luckily, we know exactly how many Bitcoin are in circulation and how many there'll ever be. Currently there's about 18.7 million Bitcoin in circulation, with a max total supply of 21 million. Due to the way Bitcoin is designed, we actually know with a fairly good accuracy how the flow of Bitcoin will be rewarded to miners over time, as the reward rate halves every 4 years roughly. Let's take a look at the stock to flow ratio chart for Bitcoin, mapped against its average price. You can see each time the mining ratio halves, the ratio jumps significantly. It's eerie how much Bitcoin's valuation has actually tracked this ratio. It has had periods of variance though, which was largely below in 2012 and largely above in 2014, but since then it's tracked fairly well. This model shows Bitcoin reaching a roughly 1 million per Bitcoin by around 2025-2026. To clarify, that would mean Bitcoin's market cap would be around about 18.5 trillion, not far off double what gold is today. Before I give my thoughts on how accurate this chart is, I wanted to run through some issues with both gold and Bitcoin. Let's start with gold. I've never personally been a fan of gold, and I'm very much in the same school of thought as Warren Buffett, as I think that gold is shiny and pretty cool, but ultimately it doesn't produce anything, and I'd much rather invest that money into something that's going to produce a benefit like a company in the form of a good or a service. On top of this, I don't like the fact that you can simply mine more gold. I know the float is very low, but I think there is a fair probability that with technological breakthroughs we're seeing in space that this could all change. It might sound crazy, but I think it's only a waiting game until someone can mine a massive asteroid made of gold. In my mind, it's a question of when it will happen, not if it will happen. So when we do, ultimately, what will the price of gold do? It'll surely shoot through the floor. For me, gold at best is a hedge versus inflation, and at worst, a ticking time bomb waiting to happen. But what about Bitcoin? I originally disliked Bitcoin for the very same reason that I didn't like gold. It doesn't produce anything, but the following has changed my mind. Even if you don't like gold, you can still see that it does has a value, as a storage of value. But gold does have further issues that Bitcoin fixes. Here are 4 solutions that Bitcoin provides. 1. Gold isn't that accessible. For you or me, it would be very easy to purchase gold. There would be plenty of ways that we could do it, but in many other countries it isn't as easy due to middlemen and the availability of infrastructure. Due to blockchain technology underpinning Bitcoin, this has all been removed. 2. There is a greater need for value storage in less developed markets. It's easy to scoff at wanting to buy gold, but it's most likely because you've been blessed with a very stable currency. Think of your salary or your next paycheck. Right, now imagine there's an inflation rate of roughly 10% per month, which means your money is declining in purchasing power by a lot every single week. Why on earth would you want to hold on cash? The longer you hold it, the less value it has. In this situation, you'd be desperate to find somewhere to store your wealth. This is a very real reality for many people around the world. Look at Venezuela or Argentina right now. For residents of these countries, Bitcoin could be a fantastic solution to their problematic situation. 3. Storing gold comes at a cost. I wouldn't want to carry around an ounce of gold, just like I would want to carry around any of my savings. The problem with gold is it needs to be stored and stored safely, which is actually pretty costly. But for Bitcoin, it's decentralised, meaning that it can be accessed anywhere in the world, so it actually has a lower cost of storing. And 4 is levels of scarcity. Gold technically has an infinite supply. Right now it's currently restricted due to technology, but there's a realistic chance or even a level of certainty that more gold will be found in the future. With Bitcoin, it doesn't matter how many planets or asteroids that we might mine, there will only ever be 21 million Bitcoin. Realistically, the only benefit gold has over Bitcoin is the fact that you can simply hold it and it looks pretty cool. So, if Bitcoin is more valuable than gold, then why is gold currently 10 times the value of Bitcoin? Surely there's an opportunity to invest in Bitcoin then. This is where I'm going to give my thoughts and conclusion. I think there isn't a lot holding Bitcoin back from being the modern version of gold. At this moment, there is currently a price discount as Bitcoin hasn't been around for as long and hasn't got the historical track record that gold has. But the longer Bitcoin is around for, the more this gap will close. In my mind, I see no reason why Bitcoin can't follow the path that the stock to flow ratio has shown us. But I do fear there's going to be a lot more resistance before we get there. Bitcoin does have lots of benefits over gold, but there is one very big problem. The majority of Bitcoin holders are investors who are speculating that its value is going to continue to go up. Are investors going to feel the same about Bitcoin when its valuation gets a lot closer to gold? At some stage, for Bitcoin to hold its value, in my opinion, it needs to still share from the existing market from people who currently buy and hold gold. You might be sat there thinking, well, why do I need that to happen? Well, the closer Bitcoin gets to gold, the less appealing Bitcoin will be to speculators who are looking for greater returns on riskier assets. They'll want to move on to riskier assets in the future when gold doesn't have as much of perceived upside. A common benchmark for investors is to get a return between 7 to 12% a year, which is traditionally gained from buying stocks and shares. As speculators are investing into Bitcoin instead of stocks and shares, we can only make the assumption that they believe the gains within Bitcoin are going to outpace those of stocks and shares in the foreseeable future. Bitcoin's historical compound annual growth rate, so on average how much has Bitcoin gained in value each year, is 200%, so that is tripling every year on average. Based on this, we're going to be matching the value of gold in just 2 years, which is quite a bit sooner than the stock to flow ratio, which is predicted this price point will be somewhere around 2025. So 2 years later than the compound annual growth rate. For me, I think once Bitcoin has less than a 30% upside to meet the valuation of gold, I think its value will struggle to break through, as speculative investors will start to jump out of Bitcoin. This means I think Bitcoin will suffer a lot of resistance around £350,000 and above. The closer it gets to the valuation of gold, the tougher it'll be, as the type of person purchasing Bitcoin will change from speculators to people wanting to hedge versus inflation. So my prediction is that the stock to flow ratio is a good guide, but it will start to break down once the price gets to around about 350k. I think it will hit around 350k by about 2025 in line with the model. From there, I think the gap between Bitcoin and the valuation of gold will close slowly, probably over a 5-year period. So it'll finally meet the valuation of gold around about 2030. For me, I think Bitcoin does have a lot of upside, but I think the sorts of people who are saying that it's going to be about £1 million per Bitcoin in the future are just purely unrealistic. Obviously, I'm ignoring inflation with that argument. For me, I think I would sell out a good chunk of my Bitcoin once it gets to about the 350k level, but I would still leave some in the market as a hedge to my decision, because after all, I could be completely wrong about it. I would love to know your thoughts though. Do you hold Bitcoin? Do you think it'll be priced like this at 2025? If you don't hold Bitcoin, then why don't you? I'd be really interested to hearing your thoughts. Let me know in the comments below. To clarify though, no parts of this video should be considered financial advice, as I am not a financial advisor, so you're going to have to make all your decisions just by yourself. If you're interested in opening a position in Bitcoin or cryptocurrency, then feel free to use my crypto.com link in the description below. Just from signing up, you'll receive $25 for free in crypto. It's free crypto, so why not? So I hope you've enjoyed this video on my Bitcoin price prediction. I hope you've gained some insight, but if you do still have further questions or comments, then please let me know in the comments below, because I really do try to respond to everybody. I do other videos on this channel around investing, finance and income growth. These include updates on my own investment portfolios, which are primarily on Vanguard, but I also do have another portfolio on crypto.com, which is obviously for my crypto. So feel free to check them out. That's all for this video. See you in the next one.